If you close the books under both US GAAP and IFRS, you know the month-end lease grind. One population of leases, two standards, and an auditor who expects it to tie to the penny. This is a working lease subledger that does exactly that. Dual standard, proven to the cent, and it was built with agentic AI under CPA direction. Let me walk you through what it can do. Start with what this is and what it isn't. It is not a spreadsheet model. It's a real calculation engine wrapped in a system of record. It carries a lease portfolio end to end, from master data through day one measurement and day two lifecycle events to month-end close, ERP posting, and disclosures. Three reporting treatments from one lease population. Five capture doors converging on one schema. And every period's debits minus credits shown as zero, proven to the cent. It stands up to an auditor, not just a demo. Here's the whole landscape on one slide. 11 domains, each built and proven to the cent. Standards and classification. Deal structure depth. The day two lifecycle events. Five capture doors. Master data and agreements. Reporting and analysis. Month-end close and posting. Controls and tie-outs. Governance and auditability. Configurability. And the AI native architecture underneath. Holding all of it together is one discipline. A byte-identical regression oracle across roughly 100 anchor workbooks that gates every single change. Let me take the pieces that matter most to a controller. First, classification. The full-on and off-balance sheet universe a dual reporter actually meets. ASC 842 Operating, ASC 842 Finance, and IFRS 16, each with its own cost shape. Classification is auto-derived from the facts, then controller overridable with a reason through a 403 gated action. Derived, then governed. The elected exemptions are here too, short-term and IFRS low value, with class-level election fence posts as controls. And the dual reporter bridge reconciles GAAP to IFRS per lease and across the whole portfolio, with the timing differences isolated to zero. Then the contracts that eat an afternoon and a stack of spreadsheets by hand. Multi-asset contracts, where each asset balances and reports independently, then consolidates. Assets that commence months apart, each on its own calendar spine. Mixed class, real estate and equipment inside one contract, routing to different GL accounts. Multi-currency under IAS 21 and ASC 830. Monthly, annual, and mid-month cadences. And every one of these composes FX times mid-month times multi-asset on one contract across all three treatments. And that composition isn't a claim, it's a matrix. Every structural combination down each column, single asset, multi-asset, staggered commencement, mixed class, mid-month, FX, and FX times mid-month times multi-asset, proven to zero across ASC 842 Operating, ASC 842 Finance, and IFRS 16. The full matrix is complete and formula verified to a zero check on every cell. Leases change, and every change re-levels the schedule and reproves to zero, replicated against the published FASB and Big Four worked examples. Payment remeasurement, partial termination, both the remaining right of use and the liability proportionate methods, because that's an ASC 842 policy election. Term shortening and extension, renewal exercise, full asset return, ROU impairment under ASC 360 and IAS 36. CPI and index-linked payments, the divergence that trips teams up, where IFRS remeasures the liability and US GAAP expenses the variance. All of it on Euro contracts too, and targetable to a single named asset while its siblings stay untouched. Your data is where it is, so the engine takes it through any of 5 doors. A keyed form, an Excel workbook that round trips byte identical, an ERP integration, a versioned REST API, where a source system posts the lease as JSON, and a live AI agent over a real MCP server. The agent books leases, pulls the trial balance, runs the tie-outs. And here's the point. All 5 doors converge on one validated schema and run the identical engine. A hand-keyed lease, an imported workbook, an API call, and an agent booking all tie to the same number to the cent. One proof, every entry point. Lease accounting doesn't start with the lease. It starts with the foundation it posts against. Entities, cost centers, the GL chart, IBR curves, FX and index rates, vendor and tax data, living master data. FX and IBR refresh monthly. The org and vendor master change as the business does. It's sequenced by design. You can't post a lease to an entity, an account, or a lessor that doesn't exist yet. Above it sits the master lease agreement, the umbrella an enterprise signs with the lessor. Enter its terms once, and every schedule under it inherits them. And a schedule can't commence outside the agreement's validity window. That's a control, not a convention. Now the deliverables, the work papers you hand your auditor, your GL, and your leadership. Per lease, audit grade workbooks, input echo, liability, and ROU schedules, journal entries, trial balance, maturity, disclosures, formula-driven, every total tied out two independent ways. Consolidated quantitative disclosures for the whole portfolio, both entity books, and every amount in the footnote now expands to its per lease breakdown, tying back to the displayed figure. A portfolio trial balance pivot at scale with a zero check. One consolidated workbook per basis, generated live, never a stored twin. And a basis comparison, the whole portfolio side by side under all three standards, cross-tied to zero. And this isn't just reports. It's a live subledger you can click into, 3 levels deep, and prove 3 ways. A lease register. Read-only grids over the portfolio's current terms, each lease in its own currency. A clickable dashboard where every KPI is a doorway. Click a number and land in the ledger, filtered to the right accounts. A ledger explorer that goes trial balance to contributing leases to journal lines with a 0 tie-out at every level. And a 3-road tie-out. Every balance proven 3 independent ways. The cached extract, a fresh resum of the journal lines, and each workbook's own trial balance. And now the subledger can explain itself. On any lease, ask a free-form question. Walk me through the accounting. Something changed on this lease. And an in-app panel answers from the system's own record. The lease's facts, its recorded day 2 event history, the schedules, the posted journal lines, and the tie-out proof. The app names the event even when the asker can't. Answers cite the exact journal lines they explain, and anything drawn from general standards knowledge is flagged as exactly that. The same explain pack serves the API and the agent door, and the whole thing runs inside the same role-based perimeter as the ledger it explains. Close the period, and it posts, like a real ERP. Closing copies the journal lines into an immutable posted register. Posting is an act, not a rederivation. Only the first open period closes, and only a corporate controller can, enforced server-side, not just on the screen. Then the case every controller asks about, a change effective in a period you've already closed. History is never edited. The posted months are flagged superseded, still visible, still auditable, and a period-by-period reverse and repost catch-up lands in the first open period, every line carrying the date it would have posted. Reopen is last in, first out, and the catch-ups unwind themselves. 5 tie-out invariants prove the whole thing to the cent, on demand. Underneath all of it is accounting integrity built into the plumbing, not asserted in a policy PDF. 2 roads tie-outs. Wherever a disclosure can be computed independently of the trial balance, it is, and a difference must equal 0 line proves it. Tie-by construction is forbidden. The subledger never posts to cache. Cache-touching entries route to clearing accounts, and the ERP owns cache. A roughly 31-column ERP-grade journal export, and the byte-identical regression oracle. Every change gates to 0 cell, diffs against about 100 anchor workbooks, including anchors that replicate the FASB illustrations, the KPMG and IFRS 16 examples, all 10 Deloitte examples, and the BDO practice aid to the published dollar. And the newest layer of that discipline, the posting feed itself, is now derived twice. A Python engine derives every posting basis journal line independently of the formula workbooks, and a gate proves the 2 roads sell identical, every line, every cent, across the entire live portfolio, before an engine feed can serve a single number. Posting from the engine road is a governed election, dark by default, and maker checker to turn on. The access administrator proposes with a justification, and only the corporate controller approves. Everything fails closed. No gated run, no close. And the design was independently audited to an empty findings queue, then proven with a real close. All 3 recognition bases posting from the engine road, 42 leases, Tieouts 44 for 44, and a road versus road difference of exactly 0. The workbooks stay the permanent oracle. The engine earns its road at every single close. Governance is where an auditor decides whether to trust any of this. 5 server-enforced roles: lease administrator, corporate controller, independent auditor, IT data steward, and access administrator, with segregation of duties the server enforces, not just the screen. The auditor gets a read-only console, the posted register, the changelog, the close and reopen history, the export history. No book button, no close button, and the server refuses the write anyway. A row-level changelog: who, which field, the value before and after, and when. The log itself, not a policy that says one exists. And AI governance that actually fires. Agents read and capture, period close, is human-gated. And a machine credential that tries to close gets the same 403 a junior would. There's even a control. On the control, who grants the access in the first place? That's maker-checker on access itself. The access administrator, a dedicated 5th role, can propose a change to a governed subset of the permissions, but it can never enforce one. The corporate controller approves or rejects every proposal live on the UI and the API at once, and only an approval changes what the server enforces. Underneath is a code-locked floor no approval can cross. No read-only role gains rights. The auditor never loses audit rid, and the ICFR anchors stay locked. And on a cadence, a user access review recertifies every grant. The SOX ITGC access review run inside the Subledger instead of a spreadsheet emailed once a year. None of this is canned. It's shaped to a portfolio's own chart: classes, policies, and history. A per-entity GL chart drives every posting. An optional overlay routes each asset class to its own accounts. Policy elections, the day count convention, separate or combine, the exemptions are configurable inputs. Chart and elections are effective dated, so the history behind a restatement is preserved, not overwritten. The workbooks compute live, change the inputs, and the numbers move. And there's a 50-account, dual-standard FX rule set spanning both remeasurement and the functional to presentation translation. A word on how it was built, because it's the part people don't believe at first. This was built entirely with agentic AI, Anthropic's Claude, the Fable 5 model, directed by a CPA. No line of code was written by hand, and the architecture underneath is genuinely audit superior, a deterministic calculation engine where cells hold formulas, not narrated numbers. Every record stored is lossless, exact JSON plus typed relational columns, and 3 audit superior data forks: frozen day 1 measurement, as booked effective dated master data, and regenerate on demand, with no stored twins. And it holds up at scale, benchmarked at 1,100 leases, with portfolio screens returning in seconds, not minutes. So that's the arc. Master data in, however it lives. Genuinely complex leases captured against it. Dual standard numbers you can stand behind to the cent, and the work papers and governance to back them. And here's the part I want to leave you with. This isn't a product pitch. It's proof of what an AI-native subledger can now do, that a controller, directing agentic AI, can stand up a dual-standard lease subledger that ties to the cent, capture to close. That's what Fractional AI Lease Controllers does. I help your team build your own. The same method, applied to your portfolio, your chart, your close calendar, your controls. If the close I just described sounds like your month, let's have a conversation.